Thanks, McKenna. Yeah, reporting Australian superannuation is certainly a topic that comes up each and every time we talk to somebody. There's not necessarily universal acceptance of what the right answer is, but the vast majority of U.S. tax preparers have probably agreed on this approach in that Australian superannuation is not deemed a qualified plan for U.S. purposes, and therefore there are a few things that have to be done with it. First of all, for FBAR and potentially for Form 8938 purposes, we do include the superannuation account, and therefore getting the highest values in that account for each calendar year is important to ensure that you're being compliant to those forms. Secondly, because it's not a qualified plan, then to the extent that there are employer contributions into that plan every year, then typically we would want to have a look to include those contributions as additional income for U.S. purposes. Now, it's important to remember that doesn't necessarily mean that there will be additional U.S. tax for that. We need to look through the rest of the information that's been supplied to understand that outcome. And the reason why it might not be the case is because the Australian tax rate on salary and wage income is quite a bit higher than the US rate, and therefore you can end up having a situation where the excess taxes on the rest of the salary income can eliminate the US tax on the superannuation contributions. You also can have a situation, depending on how much salary and wage income you earn during the year, where instead of just reporting the employer contributions, you're actually reporting the movement in the value of the superannuation fund from one year to the next. So in that sense, it captures the earnings within that fund as well. And finally, there are a couple situations where you can actually have to report everything about the fund. And that's if the fund has turned into what the US calls a grantor trust, or in this case, a foreign grantor trust. And we do need to look at those situations on a case-by-case basis to know what we're dealing with. But certainly where you have large amounts of contributions from the individual, which might outweigh the employer contributions, and especially if you have a self-managed super fund, a rollover, things like that, that can lead to a flow-through treatment for U.S. purposes and the requirements for filing additional U.S. tax forms 3520 and 3520-A, and also looking at the investments within the fund to see how they need to be reported in the U.S. return as well.